Hey, I got the update on the bank credit. The Fed released its H.8 report just a little while ago, and I will give you some tidbits. Okay, so that pause that we saw in the collapse in bank credit last week, we saw a pause. I wrote about it in MMT Trader. That's over. The contraction has resumed, and it has resumed big time. Bank credit growth now dropped again last week, a big drop last week, bringing the growth rate down to the lowest pace in 33 months. This was a new low last week. This most recent week was a new low in this collapse in the growth rate. All right, it takes us all. You got to go all the way back 33 months, 145 weeks to see the growth in bank credit this slow. All right, if you think about it, just at the beginning of January, this thing was growing like at about twice the rate as what it is right now. So a big collapse, right? Loans and leases, that's within the bigger category of bank credit, a collapse there, all right? Bringing that down to the lowest level since the growth rate since the lowest level since April 2014. All right, a big drop in loans and leases. Commercial and industrial loans, all right, those are business loans. A huge drop there, completely erasing the gain that we saw last week. That's only growing at 2.7% year over year. That thing was growing at 7.5% at the beginning of January. So those are business loans. Demand has totally collapsed there. I mean, it's practically no growth whatsoever. Deposits, hey, that's the big one, right? I've been looking at that now because that's cash on the sidelines. All you people say there's a lot of cash on the sidelines. That's bank deposits in the whole entire system. We have seen a drop in this recent week of 15.7 billion. That's the first drop in 2 weeks. I'm starting to think, folks, that last increase last week of 88 billion in 1 week, that fueled this last week's rise in the stock market. That might be over for a while, okay? Because we got a decline in bank deposits, and now you're coming into April. That's tax season. People pay their taxes. What happens to bank deposits? They get drained. They get pulled out of the system. So, I mean, that's it. That 88 billion, it's all making sense to me now why the market popped back up after that sell-off we had. And by the way, the Dow didn't pop up very much at all. NASDAQ did most of the popping. S&P is still a long way from its high earlier this month. But that was the 88 billion. That was a huge increase in bank deposits in 1 week. And a lot of that money obviously flowed into the stock market. Now, in this most recent week, a decline in cash on the sidelines. For all you people who like to say cash on the sidelines that don't know what you're talking about, that's cash on the sidelines, all right? That has gone down. That went down. So Friday's sell-off in the market, that's likely to continue next week. And who knows, could very well be through April because of tax season. One more thing, and by the way, those of you who are MMT Trader subscribers, of course, I go over this stuff in detail in the report every week. I go over every metric. I'm just throwing out a couple of tidbits here for some of you people. So I go over this in depth in the report with charts and everything. If you want to get the report, you all know how to get it. Go to pitbulleconomics.com. And right there on the homepage, it says get the 30-day free trial. And I'll even send you this email. By the way, I sent this information out in an email to MMT Trader subscribers. Finally, I want to say one more thing. Another very interesting line item in this the weekly Fed report is the profit or losses for commercial banks on their available for sale securities and also on their treasury, agency, and MBS holdings. It actually shows you if they're making money or not in their trading. Well, guess what? Because they've been underwater the whole entire quarter, this whole entire first quarter, they narrowed their loss in this latest week on the available for sale securities. That would be like, stock positions that they have. That narrowed down to about 9.7 billion from 12 or 9.6 billion from 12.7 billion. So they cut their losses there. And the on the agency, Treasury, and MBS, that also declined. I think down to 11 or 12 billion from 14 billion or something like that. So guess what? They didn't stop themselves out, huh? All you stop losers who think that's prudent, and you talk about the big boys, they don't stop themselves out. They got bailed out by a rally in the stock market and a rally in the bond market. They didn't stop. Only you idiots, you stop losers who think that losing is the path to winning. It cracks me up. It cracks me up. Hey, and you say it with a straight face. Hey, Mike, losing is the path to winning. Okay. All right, man. Keep on doing that. I love it. I love it. Anyway, get the report, everybody. Go to pitbulleconomics.com and sign up for the 30-day free trial. The report last week was 20 pages, man. And don't tell me I don't have the brain power. Get the brain power, all right? You need brain power. Have a great weekend, everybody. Bye-bye.